Welcome to a new video on my channel. I hope you're doing good. Today I want to give you an overview about the upcoming merger between ZNTE, Zanite Acquisition Corp, and EVE. The special meeting for the shareholder to approve the business combination will be held on May 6th, and the business combination is expected to be closed on May 9th. Please keep in mind, if you have shares, you will be allowed to redeem the shares before the voting. However, I'm not sure if it's still possible. You should check with your broker if that's still possible, because normally, I think 3 to 4 days before the business the vote for the business combination, the redemption period will be over, and this is normally when you see a dip in the share price. So let's have a look at the company and what EVE plans to do. As you can see over here in their investor presentation, the company wants to reimagine mobility, and you can see over here they show an eVTOL. So eVTOL stands for electric vehicle takeoff and landing, and they want to help to improve the mobility, especially in crowded and urban areas where there's a lot of traffic. So let's have a look what this could look like. And this is a rendering of the interior of their eVTOL. As you can see, it looks futuristic, and I like the look a lot. However, I'm not sure if the eVTOL will be looking anything like this in the future. As you can see over here, the intelligent glass, or the information in the glass, looks really nice to me, but will be interesting to see how it will be looking in the future if the company will produce their eVTOLs, since they're not producing any eVTOLs right now. So after you have a look inside, let's have a look at the outside of the eVTOL. As you can see, this is their design right now. So they want to start with a 4-passenger eVTOL, which is flown by a pilot, and afterwards, which means by 2030, they want to have an autonomous mode with 6 passengers, and they claim to have the most practical design choice for efficiency and certification. And they point out over here that the eVTOLs have a higher cost efficiency than helicopters, and they claim to be best in class for eVTOLs. Their range is around 100 kilometers and would be sufficient for almost 99% of the urban mobility missions in cities and metropolitan areas, according to the company. And on the next slide, they show the different possibilities how to design an eVTOL, and they claim to have the best solution. On the one hand, with high energy efficiency, and also simple on the one hand for the maintenance, on the other hand for the certification. And the design is simple, which then leads also to high reliability. And the disadvantages of the other possibilities of the design is, on the one hand, high battery drain, and on the other side also the complexity for the tilt rotors. So, in my opinion, however, what is the crucial part, or what differentiates EVE from the other companies which went public via SPAC for the eVTOLs, is their strategic support from Embraer. And if you don't know Embraer, it's the Brazilian company, and they are the 3rd largest aviation company in the world after Airbus or Boeing and Airbus. So this is something very positive for the company, and as you can see over here, this will be a big advantage, especially in the scale-up phase, since EVE will have a significant cost advantage, since they have an agreement with Embraer at favorable rates, and also they can have access to the Embraer employees, and also on the IP, as well as their infrastructure and their production capabilities, which is definitely really important to scale up. And as we can see later on, they plan to scale up pretty huge. They also have different partnerships with airlines, for example. On the one hand, SkyWest Inc. They plan to order 100 eVTOLs. Keep in mind, these are non-binding orders, or in case, I think, of SkyWest, it's an LOI. Same for Republic Airways. However, it's a good idea to have airlines in place with different areas so that they can easily scale up and sell these eVTOLs to the different companies. They also have different other partnerships with selected helicopter companies, also for lesser partnerships and for defense partnerships as well. So something to keep in mind. They have different areas where they want to deliver these eVTOLs. So after we now know what they do and what their plan is, let's have a look at the transaction. And as you can see over here, the enterprise value is around 2.4 billion, and cash to the balance sheet of the proceeds will be around 550 million, which leads to net cash of around 560 million in total. Keep this in mind for later on. And the pipe is around 357 million. And as you can see over here, rollover from Embraer and different parts for the pipe investors, so it's around 12%. And also keep in mind the cash will definitely be lower, because I assume there will be quite some redemptions and at least 30%. So I think 30% would be a good value if they would achieve this. Now, after the transaction overview, let's have a look at the growth plan. As I mentioned before, the company is not producing any eVTOLs right now, and they don't plan to produce them before 2026. However, afterwards they plan to scale up quite huge, and their revenue mix is expected to be around 50% eVTOLs in 2030 and around 20% fleet operations and around 1/4 of service support. And the urban air traffic management, I think, can be neglected since it's so tiny. This leads to the projections, and as you can see over here, there's the financial forecast. I highlighted some data which I think are really interesting. As I mentioned before, the first year when they plan to do first deliveries, in this case 75 eVTOLs, will be 2026, and they plan to be EBITDA positive by the end of 2027, whereas they want to be free cash flow positive by the end of 2029. Something to keep in mind is that they won't have any significant revenue before 2026, and this only if they will be able to certify their eVTOL by then. The other part, which is important in my opinion, is the free cash flow. And if you have a look over here, by the end of 2025, they will have more than 570 million of negative free cash flow, which means that their net cash will be gone by then at latest. So they will be in the situation that they have to raise additional capital. And if you add the numbers up of the free cash flow, there's around 1.1 billion of negative free cash flow by 2029. So they will most likely be raising around 600 million of further capital down the road. And if you have a look later on the enterprise value, so it's 2.4 billion right now. If they have to raise 600 million more, this is around 1/4 of the enterprise value in the future. So this will be dilution. And if you think that the company or the share price of the company will be going down, then the dilution will be even higher. So now let's compare the companies, and as you can see, they all came public by SPAC. I'm not sure about Vertical, but it looks like they came public by SPAC as well. And Eve has an enterprise value of 2.4 billion, which is around the same size as Joby initially, and almost double than Lilium and Vertical. Archer is even less with 700 million. And yeah, I'm not really sure what you can take of this. The enterprise value are similar, I'd say, and they have a lot of vehicles in the pipeline. However, they're non-binding, so not really sure how much credit you can give them for them. However, it's always good to know to have potential partnerships. And as I mentioned before, this is a huge plus in my opinion. The company Embraer as a strategic partner. So now, if you have a look at these companies, maybe there's something we can learn from their way for despacking. So let's jump over here to the share price and the development. However, before we do this, let's jump back to the investor presentation, and in this case to the investor presentation of Joby Aviation, because they went public before and they have around the same enterprise value. So, and in my opinion, it's the most interesting slide will be this slide over here. No, where is it? There it is. As you can see over here, Joby expects to have a revenue of around 131 million by 2024, and they plan to build and sell their first eVTOLs by then. So it will be most likely 2 years before EVE. So please keep this in mind. And now we jump over to the share price and their development. As you can see over here, Archer despaced around the end of August last year, went down to around 3-ish, and now are around 460, so around more than 50% down. And Joby, as I mentioned before, they will be most likely 2 years earlier in their stage, and had initially the same or almost the same EV as EVE. And as you can see, they went down to around 380 and are now in the 520 range, so almost down 50% as well. And Lilium, they are even down further, down around 70%. Keep in mind, however, it's not an American company, so in my opinion, they are not treated as the American companies. So there will always be less premium or a lower price, in my opinion, for these companies. And then the last will be Vertical, and they held up pretty nicely. Quite frankly, I'm only down around 27%. Yeah. However, in total, as you can see, the whole sector is down, and I'm not really sure what positive catalyst the company will be having in the future. Especially, as you can see over here, Nasdaq down, around 4% today. All the high growth company down even more, and the company won't have any significant revenue before 2026. So, in my opinion, it's doomed to go down. However, this is no financial advice, and I'm no financial advisor. Not really sure if it plans out as the usual way to the despacking process will be. So 2 to 3 business days before the business combination or the shareholder voting. There has been a dip lately, so this might be the case as well for this company. And then later on, after the business combination, a few days later on, there will be the first dip. And I'm thinking about buying puts. Not really sure if I will be shorting, since I don't like shorting in general, and I think it's highly risky. Therefore, I prefer buying puts, even though their price is more expensive. But this is something I might be looking at. I'm not sure. What do you think about the company? Maybe do you think EVE will turn things around, or do you think, like me, that the company will most likely go down after their despec? Will be interesting to hear what you say, and then until next time, have a good day. Bye bye.